So now, more than ever, debatably, hopefully, you're aware that it's vitally important to get access to capital right now, while it's relatively harder to get and increasingly getting harder to get. Two major reasons why that's important and prevalent at this time. Number one is you want to be able to make sure you can survive and possibly even thrive through these tough times that we have coming ahead of us. The next thing is there's going to be lower competition when it comes to people who have access to capital to execute on investments and business strategies. We are entering what many believe is going to be a much darker economy on a broader scale in the foreseeable future. It's already well known that the effects from higher interest rates take months to ripple out in the economy. It's estimated somewhere between 6 and 12 months before we really start to feel these interest rate hikes that we're experiencing right now. It's been about a year since the first hike started, or a little over a year at the time of this recording. And the real heavyweight is coming towards the end of those hikes, and the Federal Reserve might not be done. So the full effects of these rate hikes could echo out well into 2024 and possibly even into 2025, depending on how long they hike the rest of this year. So that means that the economy is only going to get tougher. That also means that access to capital is going to get tougher for some people. Now, the next context that we need to put in place is how a bank's starting to move in this more modern, consistently more digitized age that we're in. More and more banks that have the capacity and the infrastructure are moving towards trying to get closer to in-house decisions on their borrowers. They're doing their best to use tools, analytics, data collection to start gathering more and more information about their clientele and their customer base to see who they really want to do business with and at what level they want to do business with them. Many of you start to pay attention. There are more and more institutions that are starting to offer these, ancillary or additional convenience products and benefits. The main ones I want to focus on in this video are going to be credit monitoring services. Because you have to stop and think, we've been in a FICO-driven era for a long time. And lenders have been lenient for decades on just pulling FICO reports whenever an application comes up for a loan product. And you have to start pausing and saying, why the last 5 or 7 years or so, it's been such a big push for more and more banks to offer these credit monitoring services relatively in-house. Capital One has CreditWise, Chase has Credit Journey, Amex American Express has one, Discover has its own, Navy Federal has two. So these different institutions that have the infrastructure are constantly rolling out more and more of these different services. Chase has that wealth plan. If you've ever paid attention recently in the last month or two of this recording, they have the wealth plan that allows you to consolidate all your banking relationships and assets under one app and help you project your net worth and help give you financial guidance based on that information. And other institutions are rolling these types of products out. Many of you may think this is intrusive or you're not even paying attention to these products. But I'm trying to tell you right now that actually these products are a much bigger deal than they're advertised. What you're missing out on and what you need to start capitalizing on is when you exercise these products, these banks are able to capture more financial data about you, more about your financial behaviors. And the more they learn, if you're a quality banking customer, if you're a quality borrower, you have so much untapped potential within these institutions, because now they're limiting and cutting back on the amount of outsourcing they're doing to help make these decisions. Leaning on your bank accounts and bank transactions, balances, learning more. You're constantly noticing in these apps that they're asking more and more for you to update and provide your income. Credit monitoring, these wealth plans, these apps that allow you to pool in all of your banking and financial data into one space. These data points and this analytics that they're able to do on the back end is exactly how we're getting more and more soft pull pre-approval options. You're getting more targeted offers. This is brilliant in a sense of speaking, not only for the banks, because now they're putting all of this in-house and cutting out the cost and the somewhat antiquated system of leaning on these external FICO-like sources for data. They're just collecting it themselves. And this is going to kick the door down for those who can exercise maximizing relationship banking. Because what's going to happen, and what's already happening, is that these banks and institutions are leaning off, these dry, hard pull scenarios, and they're gathering this data as soon as you start the banking relationship with them, and they're monitoring. And as soon as they get enough information where they feel comfortable, they're targeting you for offers, soft pull pre-approvals, soft pull approvals. They're targeting you directly for what they want to provide you: auto loans, credit card offers, line of credit, business credit cards. All of this stuff is starting to get the decisions for this. More of the underwriting is becoming more in-house. More of this data is being collected beforehand, before you even show interest in these products. This is going to kick the door down for so many of you with the right credit scores, strong credit profiles, and great banking relationships, because these institutions are going to get more sophisticated, and that's going to allow people like you who are in financial position to get access to high credit limits, an abundance of credit lines and credit limits before you can even ask for them half the time, or with minimal damage with multiple hard pulls, because these institutions are going to have so much data that they're going to feel more comfortable and have enough to not need to pull your credit, to at least let you know if you're approved. And in some cases, like your Amexes of the world, once you're in their ecosystem, they rarely pull your credit again ever. This is going to be game changing for many of you that are smart enough to take advantage. Please, right now, if you are banking with any of these institutions, make sure you are activating all these conveniences. Credit monitoring, if you're with the JP Morgan Chases of the world, the wealth plan, all of these different little back-end components and conveniences in your app, max them out. Let the bank in, because the more data they have, I assure you, you're going to get more bonus offers for moving in new money, bonus offers for investing, targeted offers for credit cards, higher credit limits, because they trust you. They know more about you. Maximize this new data era that we're in to get ahead of the competition that's out there, not paying attention to their finances, not paying attention to their banking relationships, and waiting until the last minute, if at all, to try to execute with their lenders. Meanwhile, you've already built up your banking relationships. You're exercising these conveniences that are allowing you to stay on top of all of your financials and allowing the bank to learn more about you so they can roll out the red carpet when you do the work financially and position yourself properly. Had to bring this to you guys because it is extremely urgent and exciting possibilities behind this. So I want you guys to comment down below and let me know who you're banking with, and are you using these different products, and have you experienced what I'm talking about? If you are, you probably experienced, limit increases that you didn't ask for, more targeted offers on cards and auto loans. Tell me in the comments down below and let me know how your experience has been so we can keep the conversation going. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. I appreciate you guys tuning in. I enjoy bringing you this content. Like the video, subscribe down below. Other than that, I want you to stay focused, stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.